shortened versions of VCT, but it's called a venture capital trust. Right. So they are wrapped investments with smaller UK businesses. So they're not listed on the major stock exchanges. So they're not, depends on the stage of VCT it is. Some of them are a lot more sort of early stage businesses, right. Not quite startups, but a little bit further down the line. And some are a bit more mature, but they've just not listed for any given reason. And they're a lot more volatile because of their nature. They're smaller businesses, but the government incentivise private investors to invest in VCTs because they want investment in smaller businesses in the UK. And the incentives are 30% tax relief on your investment. So if you invested £10,000 into a VCT, you could deduct your tax bill for that year by £3,000. Okay. Really big benefit. And that portfolio, any dividends it pays out is free from dividend tax.
But as you said, it is higher risk.
And free from capital gains tax. But yeah, it's higher risk. So it's not right for everybody at all. In fact, even within my client bank, there's very few that I would recommend VCTs for.
Okay, but if you're young enough to expose yourself to risk like that,
and if you've got the earnings, because even if you've got the appetite, I would say max out your pension allowance first, then max out your ISA allowance, and if you still have got surplus income beyond that, then VCTs might be a good option.
Okay. So for a young person as well, how and where can they actually buy these tax-free products?
It's a great question. There are so many now. You know, I was talking about this with somebody else the other day. The difference between buying shares or stocks or opening a pension 20 years ago compared to now was worlds apart. Technology has advanced so quickly in that time that everybody now kind of has access to investments or these tax structures, ISAs, pensions. We could open up an ISA or a pension in 5 minutes sat here.
Right.
You know, before you'd have to go down to the bank, you'd have to maybe walk into the building society, you'd have to you have to call someone up and get them to send you out an application pack and fill it all out and send it off in the post. Or someone from the Pru would come around knocking on your door and fill in all your details and get you to do forms there and then at the doorstep.
What's the Pru stand for?
The Prudential.
Okay.
Yeah, the back in the sort of 70s and 80s, the Pru man used to be the guy that would come around the house and he'd sell you your endowments or your bonds, and you just literally go around door to door, sort of
making yourself sound like you
collecting them. Yeah, I definitely wasn't.
That's what I was saying.
But I hear enough about him like the Pru man. But now these days, I mean, technology is so good, and some of these platforms are so intuitive, functional, and it offers you at your fingertips an entire universe of different types of investment solutions. Okay. In terms of where they should go, I wouldn't recommend any one particular platform because I'm not affiliated to any one. But do some research. Like, there's plenty of articles out there that have assessed and ranked and rated all of these different investment platforms. Yeah. But there's loads out there. It's easier than ever. Some people might suggest that's not a great thing. You know, the amount of people that are now have access to investment, I think it's a good thing. Yeah. Because I think everybody now has the opportunity that maybe was not offered to everybody in the past. Yeah. However, it does also create slightly more volatility potentially in the markets, because now all of a sudden you have huge like swings of sentiment as investors kind of buy and sell, and there's an awful lot of unsophisticated, uneducated investors now. That might sound with easy access, and that might sound really sort of patronizing, but actually my point is just that has always been the case, because people have always had pension funds which are invested, but they never really had the same ability to make investment decisions. And I am really concerned about the influence that, like I was saying earlier, sort of finfluencers and social media content creators that focus on, I run this portfolio and this is how I made £5 million from 500 quid. And it's incredible how many people follow these pages and take their advice. And these are uneducated people. They're the blind leading the blind. But it's happening on a large enough scale that it's affecting the needle. It's moving things. It's moving the prices of the markets, which is just creating a little bit of volatility that maybe we didn't have before.
Yeah. So now people get their news or their trends from someone on YouTube or someone on Instagram or TikTok.
Exactly. Yeah. And very. I would urge anybody that does that, just make sure you know who you're getting this information from. Because these are advising you on really important decisions.
Yeah.
And just spend 5 minutes, go on the FCA register. Are they an authorised individual in financial services? If they're not, and if they've got no background in it, you really shouldn't be listening to them. Like, you wouldn't get medical advice from some guy on social media who's never worked in a hospital before. It just, it's a concern.
Always do your own research. Even if you speak to a financial planner about certain things, it's always good to do your own research so you have the understanding yourself of what you're actually doing.
It's so much of what I do, like this sort of stuff, is educational, because I have such better relationships with clients when they have a better understanding of what I do. Like, don't get me wrong, I do have some clients and they are so trusting. I have to really convince them to listen to what I'm saying so they can understand what I'm recommending, not just blindly do what I'm saying. Because that's easy enough to do, but actually engagement and education will only provide better outcomes, because they'll start to ask better questions. They'll start to have more confidence in the conversations we have. They'll help me get better objectives and outcomes for them. Education is super important, but making sure you get that education from the right sources is the main starting point.
Definitely. I mean, one of the sources I used to learn a lot before, when I didn't really have anyone to guide me, was Investopedia.
Mm-hmm. That's been around for donkey's years.
It's great though. It literally has, and it explains a lot of things to you in very simple terms as well, which is very easy to get on with.
Yeah,
very easy to get on with. So again, with ISAs and pensions, like, pensions don't always have to be through your employer. One of the actual platforms I use, I know you don't want to recommend any platforms because you're not affiliated or anything, but one I actually use, I don't mind just mentioning what I use. I'm not recommending it to anyone, but I use an app called Moneybox, where you can have a pension on there, you could start a lifetime ISA on there, you could get mortgages on there as well. They've been around for years.
I used to have an ISA with Moneybox.
They've been around. And you can also, a lot of people, one thing they recommend, and I get a notification all the time, is a lot of people have worked in many places over their lifetime, and they have pension pots with companies they are no longer with, which can get lost, With them, you give them the information and they can track down those pensions and put them all back into one pension pot and stop you from losing. Even if it's £100, £1,000, something, it doesn't take too much work in order to recoup what you've paid somewhere else years ago.
It's a fantastic facility. You still need to know where those pensions are, and you need the plan numbers, and you